Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys are having an awesome holiday weekend. Since there's no trading today or tomorrow, I don't think Monday either. I thought I would take the opportunity to talk a little bit about how I got onto Robinhood. A lot of you guys have been asking in the comment threads, how long I've been on Robinhood, what my background in finance is, how much money did I put in, what did I first buy when I got on Robinhood. So I thought I'd take the opportunity to rewind back to when I first got on Robinhood and review some of my first initial trades. So a lot of you who have watched my videos before know that I am not a seasoned financial veteran. Before Robinhood, I essentially had invested in some mutual funds on an E-Trade account, which is simply amounted to nothing more than putting in money on a regular basis and then maybe checking my portfolio a few times a year. But save that, I was not buying and selling individual securities. I was not trying out different dividend capture strategies and looking for ex-dividend dates and earnings reports and all this sort of thing that I'm doing now. Basically, just funded a retirement account and funded a IRA through some mutual funds. That's really the extent of it. So, a colleague of mine was telling me about Robinhood. As you can see there, my first deposit. Actually, I don't think that's my first deposit. I think my first deposit was on the 28th. But back in June, a colleague told me about Robinhood no commission trading. As we were talking about, investments and buying and selling stocks, and essentially telling him that I wasn't really doing that because of the exorbitant fees. $10 to buy a stock, $10 to sell a stock. I didn't really want to, buy $10,000 worth of stock at any one time because I really wasn't versed in the financial arena. It would be more or less gambling with my lack of knowledge. And he suggested I get on a Robinhood, kind of try out buying and selling stocks because there's no commission trades. In fact, one example he gave was buying and selling, a penny stock. Buying 50 cents worth of penny stock and buying and selling it throughout the day. He had more than $25,000 in his account, so he could do that without getting labeled as a pattern day trader. Instead of just a little bit of fun that he would do at work, instead of playing, some of the online games like Angry Birds or whatnot, he would simply jump into his Robinhood account and play around with penny stocks, buying and selling those. So I thought I would give it a shot, open up a Robinhood portfolio account. You can see here on end of June here, I put in some money. $200 is showing, but I put in about $3,000 overall. And you can see my initial purchase there, Bank of the Internet. And the story behind this is I was reading a few articles about how it was under an SEC investigation, but the investigation was essentially unfounded. It was a pump and dump scheme, I believe, where they were trying to dump the stock on basically on shorting the stock. But there's nothing to that. So I went ahead and bought, assuming that the stock would rebound, and it actually did. But one quick story, or one quick lesson I learned about this was don't trust anything you read on the internet. So from June until now, I've noted that the internet stories are essentially false. I mean, even stuff like, Jim Cramer and a lot of these stories on MSNBC, a lot of the more respected, financial shows, I don't listen to any of that stuff anymore. A lot of the plays I've made have worked out well despite what analysts have been saying are, bad trades or, have held through, periods when they've said sell this or sell that. So I really don't listen to any of that stuff anymore. I go ahead, investigate, research the stocks that I like. I also try to get stocks that I know a little bit about in my industry, as well as stocks that other colleagues have traded and have some experience in. So lesson one, don't listen to anything you really read. You can see there the first stock I did, Bank of the Internet. Also bought some AMD, which I wish I would have bought and held that for the long term. And second lesson learned was don't go ahead and sell if you just make a quick few bucks. You can see AMD I bought for essentially $5.93. That's now I think over $11 or $12. So I think it's 60% up. So if I round that up to $1,000 there, that market buy, I would have made $600 on that stock. Unfortunately, I sold off for $40 gain there. So lesson two, don't necessarily get enticed by a quick sell. Buy and hold is the way to go. I know I've been doing a little bit of day and swing trading, but the majority of my money is in buy and hold strategies. The day and swing trading stuff is just for fun. I think it's a viable investment strategy, but it takes a lot of time And unless you can sit in front of the ticker all day and really jump in and out of stocks, it's kind of hard to do. I put in limit buys and limit sells to do that. Again, it's fun to do, but I do not do that with the majority of my capital. I also bought some Dow Chemical, and my first big purchase up top there is Pfizer, along with Portola. I bought a few more shares of Portola a little bit later on, but those are my two initial big buys. Pfizer, in my industry, Pfizer is very well known, so I went ahead and bought. Unfortunately, I bought right when it was at its absolute zenith for the entire history of that company, $37. After that, it started trending down, at one point getting below $29, but holding that long, I'm not going to sell off right away. And the Portola was another speculative play. I knew about a breakthrough drug in the pipeline. There was an FDA decision on that in later fall. Actually, about a month after I bought this. I think it was August or September. Unfortunately, the drug was not approved, and that stock tanked. I think I bought for around $26, $27, and it tanked to, at one point, almost $17, $18. I just put a video about that yesterday. It did come back quite strong, made about $6 in one day. I think it was up 34% at one point. But a speculative play on that one. And then I bought some closed-ended funds as well. That really didn't work out for me too well. I was enticed by the very, very high dividend yields. But again, after doing a little research, learning a little bit more about investing, these companies are very, very risky. They have very high dividends because they are very, very risky investments. And I would not at all suggest buying these for the long term. I think a couple of these companies are good. They kind of play around with for a while, but they're very risky. They can go up and down at a moment's notice. One of the funds I bought tanked like 13% in one day. Didn't really recover. I was fortunate to get out of that particular play. I had about $2,500 in that closed-end fund, but got out. But again, I would not recommend that. So yeah, I don't want to make this video too long, but that's kind of the history of how I got into Robinhood here. Back in June, on the advice of a colleague, put a little bit of money in, initially not knowing at all what I was doing, with no experience buying and selling securities. And now, after doing a lot of reading, a lot of input from you guys, thank you very much for that, I think I have a pretty good handle on the markets. They can be quite fickle. I don't really trust anything that's on the internet or in some of these, entertainment financial shows like Jim Cramer and a lot of these shows on MSNBC and other places, Fox Business as well. You really just got to research the company and then also base your decisions off past performance. So a lot of the stocks I buy are, as I have said in quite a few videos, blue chip stocks, high dividend yielding stocks, stalwarts of their particular market industries, large cap companies that have a long, long history. I actually put a video out a few days ago, actually I think it was a week ago, about companies that have had success for the last 100 years. Those companies are very safe. A lot of these other companies, like these closed-ended funds here in the middle, like PCM, PTY, GOF is okay. I think that's okay stock for a new investor, but a lot of those have great dividends, but they're very, very risky. So I like the high market cap stocks, large cap stocks, blue chip stocks with good dividend yields for my portfolio in a buy and hold strategy with a little bit of day and swing trading, like I said, on the side for fun. So yeah, not to make this video too long, I'll kind of end the video here. If you guys have any comments, let me know. Let me know how you guys first got onto Robinhood, whether it was through a colleague or just saw it on the Android Play Store, iPhone Store, the App Store, or through a different means. You're getting sick of paying high commission fees, possibly, or you just maybe saw my videos on YouTube or other people's videos about this. So yeah, just kind of let me know how you guys got on to Robinhood as well. So with that, I'll kind of end the video here. As always, if you enjoy my videos, feel free to like, share, and subscribe. I'm having a ton of fun putting these videos out, learning a ton about the market. Hopefully you guys are picking up some as well. Thank you for your comments. I've learned a ton from user-suggested topics to kind of read up on, so definitely appreciate that. So with that, I'll kind of end the video here, and we'll see you guys tomorrow.